Greetings, everyone. This is Richard Crevo. I was working with a client yesterday during one of our one-on-one mentoring sessions, and the question of trailing stops came up, and I thought that would be a good topic for a quick YouTube video here. Also, if you're interested in mentoring, please email me for details, rcrivo, rkrivofx @gmail.com. Let me get a quick disclaimer out of the way here, and then we can move forward. Trading foreign exchange involves significant levels of risk, may not be suitable for all investors, and there is no guarantee made or implied that any trade analysis, trading strategy, trading process covered in this or any other video will result in profits or not result in losses. Okay, trailing stops. There's simply a way to adjust your stop to lock in profit should your trade continue to move in your favor. And there are a variety of ways to trail one stop. Much is going to depend on the charting package that you use, however, and what your broker, what the particular charting package might offer. I like the Market Scope charting package as it offers quite a bit of versatility and there is no charge for its usage, which is always kind of nice. So the first thing I want you to remember is to set your stop first before you ever enter the trade. Know where you're going to place your stop, and then put it at that level, a level that makes sense on the charts, a support or resistance level, for example, as opposed to just a random number. And we're going to get into these charts on a euro-yen trade here in just a bit. Oftentimes, what traders will do is they'll trail their stop used on a fixed number. Let's say 30 pips, for example. That's fine because you'll lock in 30 pips as your trade moves 30 pips in your favor, but it may not make sense for the way the price action is shaping up on the charts. So personally, what I prefer to do is trail my stop manually, as sometimes the price action on the chart might dictate that the stop be adjusted 30 pips, another time it might require that it be adjusted 10 pips, another time it might be 85 pips. You get the idea. Anyway, let's take a look at this euro-yen trade here, for example, that I've been in here for a few days, and I just want to show you a couple different ways that we might handle it. Now, this is a 1 hour chart, and I believe I entered this trade, however, off of a 2 hour chart, and we can see here this green arrow. Let me expand this just a little bit for you. Yeah, this green arrow right here is where the trade was entered. You see, just when it broke above a previous high based on the Donchian channels. For those of you that might not be familiar with some of the things I have on my chart, go back to, I forget the exact date, but it's a previous YouTube video, and I believe it's entitled Charting Tutorial, something like that, and it'll explain what I have on my charts here. So when I initially got into that trade, based on Donchian channel strategy, my stop was below the lower channel. Here's where my stop is right now. It got trailed up because the lower channel is at this point. Now, what I can do is I could trail up my stop, moving it up right here, for example, and this is one of the things I like about Market Scope charts, because it just allows me to adjust the stop that easily. And so now I'm at a support and resistance level, a support level that makes sense. It's below the 200 period moving average. And if price action would get much below that level, I want to get out of the trade because the sentiment on this particular currency pair, on this particular currency trade may have changed. And in this situation, if my stop was originally down here, and now I adjusted my stop up, for example, 152 pips. Okay, most people aren't going to be trailing a stop 152 pips. It just, who knows how that might make sense, but it does in this particular scenario if that's where I like my trade, or excuse me, where I like my stop. Also, I could move my stop up to, here's another level that on this 2 hour chart, that placing the stop at that level would make sense as well, because here's where price action traded down. It put in a bottom, a relative low right there, and then it started to move up. If I really want to get more aggressive, another spot where I could trail my stop is right below this wick. Hang on, there we go. Let's see. Didn't quite take there. Now we'll do it. There we go. I could trail the stop to just below this wick, the bottom of that wick right there, because if this retraces, and at some point it's going to come down, we don't know how far, we don't know when, but a movement that's almost parabolic like this to the upside is going to retrace at some point. If it retraces below this level, takes out this level right here at 136.09, I'm going to want to be out of the trade at that point. And by trailing the stop to that level at this point, I have locked in 54 pips of profit. From the time we got into this trade, I mean, this trade has worked out nicely for us. From the time we got in, whoops, didn't grab it right. Let me go back to the ruler icon. From the point we got in to the highest point up there, we were up at one point about 350 pips. And right now we're up about 315 pips on the trade. So naturally, we want to be locking in some of that profit. But my point is, on trailing stops, I much prefer to do them manually because, like we said earlier, I had the stop roughly in that area. That the first point, I moved the stop from there to there. That was 175 pips roughly. Then, or no, originally, I'm sorry, I moved it here. That was about 130 some odd pips. Then I could move it here. That was trailing from the original position, 169 pips. And then I could move it there, which is a trailing 261 pips. In each instance, it's not just a random number, like a trader who might trail their stop 30 pips, 50 pips, or like I said, 85 pips, something like that. This is trailing your stop and putting it at a point that makes sense on the chart based on price action rather than just a random number. Okay, I hope you found that helpful. This was just something quick that I wanted to put together and get out there for you. Richard Krivo here. Thanks for listening. And with any questions, feel free to email me at rkrivo, RKRIVOFX @gmail.com. Look forward to hearing from you.